let us move to the wonderful world of blockchain and all that stuff. I mentioned at the beginning, clearly, I mean, following these new currencies is an extraordinary thing in itself. If you think the gold price is hard to forecast, then how much more for blockchain and all that, and of course many other currencies. But we keep reading that a safe and a sensible way into this whole new asset class is by looking at companies that incubate and invest and have some knowledge. And we have two of those here with us tonight. So let us start with Coinsilium. Its chief is Eddy Travia. I think they came to market at the end of 2015.
Thank you. Always a pleasure to be at NEX Exchange, as I was saying, where our shares have been quoted since December 2015, and very happy to talk more about Coinsilium and our activities. Just before I start, this is the usual disclaimer, and before I talk more about myself and Coinsilium, who's here has heard about, or who owns Bitcoin or cryptocurrencies in this audience? Okay, well, that's good. That's a fair amount. So we're going to talk about blockchain and how we have seen it, how we have approached it. And I've been in this space since 2013, so it's a bit early in this specific industry. We have been starting as an incubator, so the idea initially was to invest in the companies that contribute to the ecosystem of either Bitcoin and blockchain. And at the time, in 2013, there was not such a choice as today. So today we're speaking about more than 1,000 cryptocurrencies and definitely more than 1,000 companies globally. But in 2013, there were only a few companies in this space, and we wanted to really contribute to the development of this infrastructure. So before that, I was in China working on private equity, and we organized the first digital currency event in Singapore in 2013, and in 2014 already seen among the first investors and the most influential in this space. So first blockchain company to float via an IPO in this here at NEX Exchange, and we have been investing always very early stage. So our strategy is to go early when valuations are still reasonable, and trying to spot the next, the next big company or the next company that can do well, that can have an impact in this space. The way we do that is we look at the team. We have been talking to, for example, the entrepreneurs and the ones that we are supporting now. We've been talking to them for a long time. Usually, we spend some time with them. We analyze their proposition, their proposal, and then we move in cautiously. We have recently launched a company in Gibraltar called Terrorstream, which is part of our new activity in the token economy, which we're going to talk a bit later, and we also aim to do a token sale for that business. The reason why we've chosen Gibraltar is that Gibraltar is actually building a regulatory framework specifically designed for blockchain technologies that they call the DLT framework, distributed ledger technology, and it's one of the first governments in the world that actually actively looking to do that, and the regulation should happen in January, beginning of January 2018. We're also an accelerator, so we stayed historically, this is our main activity initially, and we continue to do pre-VC work, so basically we invest before Series A or now before ICO, initial coin offering. And we have run the first batch of startups and the first program with the first batch of startups last year out of Barcelona. So this is the timeline, and these are some examples of companies we have invested in. And so we started with 6 startups in the space before we get our shares quoted on NEX. And then we increased that to 11. So the way we changed a bit our investment portfolio is that, as I was saying, we started more with transactional companies, so payment processors, wallet exchanges, because these were the first companies where you needed to do something with digital currencies. But actually, in 2014, 2015, there was a shift from digital currency to blockchain as a technology. And in 2016, very early, Harvard Business Review qualified blockchain as a foundational technology. So a technology can have a long-term impact, a bit like the internet had in our lives since the 90s. So we shifted and we started investing in platforms. So for example, Factum, for example, RSK, which are platforms on which you can build thousands of applications. And this was our interest, and this is how we change a bit the focus. But of course, always remain platforms for blockchain companies or blockchain protocols themselves. So we invested early 2016, the first investor in RSK Labs, which is a smart contract platform. Smart contracts are programs, code, that in a way can reproduce a regular contract, but in an electronic way. And basically is a process through which you have an input and then there is an output. So for example, you could use a smart contract to say, if the price of, to make a bet on a price of gold, for example, if the price of gold is that much, then this wallet gets this payment. So this is a type of smart contract. And RSK Labs is a company that developed a smart contract platform validated on Bitcoin instead of the actual blockchain called Ethereum, which was initially developed for smart contracts. We launched the Blockchain Startup Accelerator in Barcelona in 2016. And in 2017, we strengthened our board with Malcolm Paley, our chairman, who's in the room as well. And we actually raised funds over the last few months. And we raised about half a million pounds over the last few months. And now, in this wave of token offerings, we did our first 2 investments in what we call pre-ICO. We invested in equity in Coindash and Indoors, which are companies that we knew were going to launch a token sale and issue their own tokens. We'll talk about that a bit more later. So a very quick summary or brief summary about what is blockchain technology. I think the most important is to understand that blockchain technology allows entities or people or companies that do not trust each other to trust each other through a system which is actually mathematically proven and that works, that relies on technology and math to actually make sure that transactions are validated. So the initial blockchain is Bitcoin, and it's still the largest network out there with the largest computational power protecting the system. But today you have hundreds, thousands of other blockchains. Some of them with tokens, some of them are kind of in-house experiments by financial institutions, banks, or insurance companies. And they are basically decentralized ledger recording transactions, and all these transactions are stored in blocks and linked in a chain of blocks. Now, the reason why it's very important is that it's all time-stamped and that you cannot go back and change anything. If you do, you break the whole chain. So Bitcoin blockchain, for example, has never been hacked since it started early 2009. That's quite important to notice. So this is about smart contracts. As I was saying, you can make a few common points and differences between traditional contracts and smart contract. Actually, smart contract is an old term. It's a term from the 90s that was initially coined by Nick Szabo. And Nick Szabo was technology and at the same time a scholar in law. And the idea was to reproduce contracts in an automated and programmable way. So as you can see, there are different, it's basically more flexible, it's quicker, and you can process a lot of the contract obligations in a programmable way. That's basically the main thing. And there is a process called Oracle, which is a service supplied by Oracle companies. And what they do, they feed data, external data, to the blockchain, to the smart contract. Because the blockchain is a closed word in itself and doesn't communicate with the outside world. So if you want to tell the price of gold in the example I've given you, you need an oracle to feed that data. For example, from Thomson Reuters, Bloomberg. Thomson Reuters is building its own oracle service, and they're going to have all their services, all their data going onto the blockchain in smart contracts by producing their own oracles. So this is a quick overview about our portfolio. Coindash, a crypto trading platform, is the first social trading platform for crypto tokens. So hundreds, thousands of crypto tokens. And if you want to manage them well, CoinDash is one solution out there. Is the first that's looking at social trading in this space. Indoors, decentralized social network for professionals. So you think about LinkedIn in a decentralized way. The fact that you need to validate your claims. If you have a skill, you have to kind of prove it, and you have to be validated by a community, by your network. And the fact that when you own your own data. So basically, instead of a central company like LinkedIn that is monetizing your data, you will make money by being active and by supplying more data on this social network. Consensual, financial service, trade finance. Trade finance is a sector that can gain a lot from blockchain technology. The fact that you can track. Blockchain creates this natural audit trail, and basically trade finance can really gain cost efficiency and time and speed through this system. Factum, as I was saying, is one of our, let's say, stars of our portfolio. We invested in 2015, 2016, and then later on there was a Series A round led by Tim Draper for $8 million. Factum is very active in the space of anchoring data on the blockchain, so making sure that the data is there at that time. And they do that mainly with, for example, the multi-billion-dollar industry of the mortgage industry in the US. And all the due diligence compliance documents that people provide when they do a loan, when they make a loan for a house in the US, will end up on the blockchain via a Factum solution called Harmony. And as I was saying, RSK Labs. It's a bit more technical, but basically a competition to Ethereum. So Ethereum is one of the success stories of the blockchain. They've done very well. The price of their tokens has gone up, but at the same time, it's a very large community of developers. That's a big strength for Ethereum. And RSK Labs provided a solution which actually is fully compatible with the programming language used by Ethereum. So any developer programming for Ethereum can also program for RSK, and we see this as a very valuable asset in our portfolio. So as I was saying, we invest in equity in all these companies. And these are some of the accelerated startups. So HelperBit, social impact company doing also P2P insurance for natural disaster relief. So actually, Bitcoin or digital currencies are a great way to cut through financial intermediaries. And for example, in a natural disasters situation, that's a great way to reach the victims or the people that need funds. And also offers a great degree of transparency. Because of this audit trail, you can follow where the money is going. So if you don't trust a charity to actually help the people with HelperBit, that can be solved, or that can be clearer. Mindbox is a data storage company. So basically, you buy a machine, you store your data as you would with any other device. But the difference is you can make money, you can monetize your space that you're not using. And they add this layer of software and this layer that will connect you to this kind of virtual cloud on which you will secure your data and at the same time monetize the idle space that you're not using in your hard disk. Now, this year is a year of ICOs and token issuances. The cumulative value of tokens sold over the past 18 months is $2.1 billion. In a way, it has taken everyone a bit by surprise, even the insiders, because we saw that coming last year. There was First Blood, which came in 2016 and did well, and then Golem, and then a few examples are here. But actually, the examples I have here between November and about May or March 2017 are actually lower in value than some of the larger what we call token sales. Some of them have reached more than $200 million. And the whole economy has been built around it, a whole ecosystem. So for example, you have now multi-million-dollar hedge funds which started investing early, and because their cryptocurrency has gone up, they have sufficient funds to become actual funds. Although before maybe they were just more traders. Now they've become funds, and they're trying to spot the next one that will go up. And this market doesn't seem to slow down at all. So about 200 ICOs are planned in October, 200 new tokens, every day new tokens coming up, and the market, the cryptocurrency market cap growing around 150 billion these days, and Bitcoin represents about half of that. So it's a very fast growing market. So in this market, we one of our activity as a venture builder is we decided to create a company called Terrorstream and based in Gibraltar. Our chairman has an experience in the field of natural resources and mining companies, but at the same time we were looking for a solution that can expand beyond that. And basically we're trying to help companies in this sector finance their activity, their operations through issuing tokens. So we are working on that with a law firm in Gibraltar called Isolas, and we're working with the Financial Service Commission there as well. And this is an ongoing project that we have started, and very exciting in terms of the reception by the industry and by the major actors in this field. So we also do what we call ICO advisory services. The main reason is, first of all, there is a lot of demand for that, and the ICOs are coming from either experienced crypto entrepreneurs, but also less experienced crypto entrepreneurs who want to go into this field, issue their own tokens, and it's becoming an activity that is growing fast as well. So we have been helping these companies basically doing their token issuance, which means connecting them with the people we think are going to help them, either as potential token buyers or legal services, or of course marketing events, etc. I mean, you can note that there is about, I would say, at least 10, 12 events a month in this space, if not more, sometimes several in the same day on different parts of the world. So it's very active. I will let the chairman, Malcolm Paley, finish with this part of
Thank you very much. Don't go anywhere because there'll probably be questions. Right. Just really wanted to sum up what the investment case is all about. Eddy focuses on the technology and the investments and everything else, but the important thing to know is what this means for investors and what the opportunity is and what we're trying to communicate. So, in a nutshell, we have 111 million just over shares outstanding. Current share price as of yesterday's 3.4, I think it's about 3.25 pence now. Our market cap is a little under 3.8 million. One thing we actually omitted to point out was after our raise, which took us to, I think, 555,000, we also exited an investment at 362% premium on what we actually paid. So we invested in a company called Satoshi Pay. We put £200,000 thereabouts, euros, sold the stake earlier this year, actually completed in August post half year for 725,000 euros. So in addition to the cash we have declared at half year, which was just over 330,000, we've also got that 725,000 euros, about 650,000 pounds equivalent. So that's those are the numbers. Do your maths, and we're very excited about this space. Another thing Eddy perhaps didn't point out, which I'd like to mention, is these advisory services that we're providing to these token companies are not coming for free. So that's the case. Any questions for Eddy or myself?
Just one question. I mean, obviously the price of Bitcoin's rocketed this year. Is there any relationship between the value of Bitcoin and the value of your assets?
Not a direct relation because, as I was saying, we invest in equity. And
wouldn't you expect there to be one?
Well, I think in terms of perception, yes. I mean, the more and more people look at companies like Coinsilium and other companies in the space of blockchain because the Bitcoin price is going up. I think people make the relation because they feel that if the price of Bitcoin is going up, there is more interest, there is more trading. I mean, the volume of trading this year has been increased, has really spiked. So there are some exchanges trading hundreds of millions of dollars a day in the world, and the overall trading is about $3 to $4 billion a day in terms of the main cryptocurrencies, which are Bitcoin and Ether. So it shows that there is a high activity, and it does bring a spotlight on this industry. So usually when the Bitcoin price goes up, people look more at blockchain and at the companies in the space. Yes. Definitely.
Do you have any kind of internal measure as to how vulnerable a company will be to the price of the the blockchain currency that's involved, or whether it's to do with the sort of potential of the database or whatever it is?
Well, most of the companies in this space are still private companies. So I'm not sure we suffer much from any drop in Bitcoin price, but I would say most of the companies, like the big exchanges, are making a lot of money these days from trading Bitcoin. And now I was at IG the other day, and they were telling me they also have a very active Bitcoin trading platform. I don't think for the moment we can easily make that correlation. No.
I've been reading some criticism of hedge funds for being allowed to get in on the ground floor on coin issues and sort of snagging in effect, which is what everybody used to do with new shares. And apparently this is regarded as rather unethical because anybody else who's then getting in doesn't get all the benefits of those early issues.
Yes, well, I guess it's the same as any investment proposition. I mean, you always have people that come in early because of their contacts and because they are more active in the space. So some hedge funds, if they are well connected, they may get what we call new tokens, new coins at a cheaper price. But that's usually part of the strategy of the token issuer, that they want early investors coming in, and they want early token buyers coming in. So I think for the moment it's an unregulated market, and I don't think it's that different from most of the investment world when it comes to private companies.
Okay. Any more questions for Coinsilium? One there.
Thank you very much. So my first question would be, the gentleman here said, if the prices of some of your assets are related to Bitcoin. And as far as I saw your portfolio, you have several number of coins and tokens which currently are traded only against Ethereum or against Bitcoin. So let's say, for example, Factum is traded mostly against Bitcoin. So as far as I believe, the price of Bitcoin will influence currently the price of Factum.
The price of the token, we don't hold factoids. We invested in Factum as a shareholder, so we hold shares in Factum, which are valued, let's say, at the latest fundraise, and it is entirely disconnected to factoids, which belongs to a foundation that Factum did a few years ago, and there is no correlation. There is no relation between the market cap of factoids and Factum, the company, the private company in which we have shares.
And in relations, for example, with CoinDash and Indoors, which are tokens, you hold tokens, right?
We hold tokens we didn't buy the tokens, we get them as a bonus from our equity investment. So here again, the difference would be, I think for CoinDash and Indoors, the relationship is a bit stronger, yes. Basically, the value of the company in a way could be linked to the value of their tokens, but not necessarily because of the fluctuation of the Bitcoin price, but the fluctuation of their tokens. So we hold equity again, so we have a stake in the company controlling CoinDash and the company controlling Indoors. And we have tokens as a bonus as an early investor.
Okay, and I will have another question. CoinDash started very bad, the ICO with a hack.
Yeah.
You were in CoinDash, you were investing in before hack, and it will be nice to explain us a bit how they handled the situation, because from outside I saw that they started very bad, end up very good. So, but we don't, for example, I don't know too many information, but it's a very, very nice issue. If you can explain more about it.
I think they handled the situation very well. I think the first thing they did well is that what happened with CoinDash, I think they didn't expect, obviously, that the website itself, where they would put the wallet address to fund, to buy tokens, would be hacked. And therefore, some people sent a lot of Ether to the wrong address. And what they did very, very quickly, they told everyone that everyone will get their tokens. So they handled the situation quite well. Then they went to the authorities. So CoinDash is based in Israel, but their company doing the ICO is in Gibraltar. It's a subsidiary. And so both Gibraltar and Israel authorities and cyber investigation units are working on the hack. And so they, we believe CoinDash is a great solution, and we have been supportive all along. And actually, in terms of, if you look at the value of the amount they raised, actually they raised the right amount because the Ether price went up since then. But at the same time, something interesting happened, which I've never seen before, is a hacker returned about $2.3 million recently. So we have no idea why, or we're not inside anybody's heads. But so this happened. So basically, I don't think the hack comes a bit in the media sometimes as as one of them, unfortunately. But at the same time, we're very confident in CoinDash.
Well, this is an entirely new concept, an ethical hacker, but it's probably under a lot of pressure. Anyway, thank you very much indeed to the pair of you, Eddy and your chief there, and obviously they'll be available afterwards.